What's up, traders? It's your boy, Mr. Cosmic at the Cosmic Trading Academy. Also, train, travel, trade, where I travel around the world, trade by doing so, and try to stay fit in the meantime. Today, we're going to be talking about futures trading, which is something that Robinhood just opened up for people who have a lot of experience in trading. And I just finally got my open account. I haven't done anything yet. I'm just watching because different platforms, different brokers trade differently. What is about futures? Okay, we're going to dive into it for a sec. Futures contracts are agreements to buy or sell an asset, something like gold, oil, cotton, pork bellies, oranges. It could be things like that at a predetermined price on a specific date in the future. You're not actually buying or selling these assets now. You're agreeing to do so in the future, later. Okay, so why do people use futures contracts at all? Okay, well, people trade futures for a few reasons. Hedgers, like farmers or businesses, they're going to use them to protect against fluctuations. Speculators will try to use it to profit by correctly predicting which way the market price will move. Leverage is a big draw. Okay, small price changes can lead to large profits or losses. So, okay, you have to keep that in mind. Yes, there's big profits, but there's also big potential for big losses. So don't get caught up in only the profit. As a trader, you must, it's a zero-sum game. Wherever somebody's losing, somebody's winning. So you must remember that even if you're making big profits, you can equally make big losses, okay? Margin, let's talk about margin, which a lot of people have a lot of confusion about. But basically, all margin is a deposit that you're putting up to cover potential losses. It's much smaller than the value of the contract, okay? And that's where leverage comes in. That's why you can make so much money, because you can use margin to control a big amount. It's like a little guy who has a big group of people behind him, okay? Something like that. Mark to market. Mark to market is something you might have heard if you ever watched the movie Smartest Guys in a Room, or if you ever learned about, truly got into depth about the finance behind the Enron scandal. You will learn about mark to market because they were using that accounting practice, okay? Or they were using that trading practice, okay? Your account is updated daily based on the current market price of the contract, okay? Profits and losses are reflected immediately, okay? Mark to market. So keep that in your mind. Take a look at that. Expiration dates. Futures contracts have expiration dates, just like options contracts do, okay? You can either close your position before then, or you could take delivery of the asset. If you hold in the contract until expiration though, well, you can hold it to expiration, but the reality is most people don't do it because they really don't want the asset to come to them. You don't want whatever pounds of gold arriving on your doorstep, or a truckload of bananas or oranges or whatever it is that you might have, orange juice or whatever arriving at your house. But what I want to tell you, most importantly for you future traders, is that futures trading, just like options trading, is a very risky prospect. It's a very risky business. Leverage will magnify your profits and your losses. Prices gonna move very, very quickly and unexpectedly, and you can always lose more than your initial investment, okay? Well, thank you for guys. This is a very brief overview about futures trading. It's complex. It requires significant research and understanding. If you're interested, do your homework. Consider practicing with a demo account, and consider consulting a financial advisor. Okay? It's your boy. It's your guy, Mr. Cosmic, Cosmic Trading Academy, where we train, travel, and we trade. I'm out live from Vietnam. I'll see y'all on the other side.